How are rates determined for an SBA 504 loan? Essentially, it's the CDC piece, which is the second lien, and then there's the bank piece. We're going to talk about the second lien, which is a 25-year fixed rate loan. And the CDC piece is tied to the 5 or 10-year treasury, and that's how they determine rates. And essentially, during the interim stage, the bank funds the first lien and the second lien, and then there's what's called a debenture. And when the debenture happens, that's when you can actually lock in your rate during that debenture period. So unfortunately, if you're doing like a construction project, you're going to have interim financing until you get certificate of occupancy. And at that time, when the debenture, which the debentures usually happen once per month, that's when the rates are determined and you're locked in at that point. So it could be a month, it could be a year or 2 years, depending on your construction project for this 504. And so when the rates come out, they're essentially tied to the 5 or 10-year treasury. Rates come out, once per month, and then at the time of the debenture, that's when your rate's locked in. So you can't lock in today for a project. Even if you were buying a building that was stabilized and there was no construction, you're going to still have an interim piece. So the bank's going to fund the first and the second. You're going to close escrow, and then sometime in the next 30, 60 days when the debenture happens next, that's when that rate's going to lock. Now the banks, for the interim piece on the second loan, they could be based on Wall Street Journal Prime +1. It's really a negotiable depending on the bank. So to kind of circle back, once a month, rates change for the second lien, the CDC piece or the SBA piece of the 504. The first lien is going to be dependent if it's a construction or a stabilized type of deal. If it's a construction project, usually you're getting an interim first and an interim second. If you're buying a stabilized property, you're going to get a secure, a fixed rate 5, 7, or 10-year term on your senior debt, and then the second will be interim financing until the debenture happens. Anyways, I know it's kind of confusing. Hope I explained it to you well, but just book a call below. I'm happy to explore and explain any questions that you might have on any SBA financing, whether it's a 504 or a 7A, and also determining what might be the best loan for you, whether it may be an SBA loan or a conventional loan, or it could be a combination of both. So anyways, hope you enjoyed this episode, and we'll see you on the next one. Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon.